Good morning, good evening, good afternoon, whatever time it is, wherever you are right now. And welcome to another session of Bizarre Financing. I'm Gordon Bizarre. We've had a bit of a political upheaval over the last week or two, and a lot of interesting things are happening, and they're going to have a pretty dynamic effect on business. And so I thought I would take this first webinar that we're doing post-election and explore the impact of what's likely to happen with the change of the administration and the control of both houses by the Republican Party. So my goal is not to get into politics itself, but just to look at the policies themselves that are being espoused by Trump and his administration, and looking at what the impact of those are likely going to be. So there's plenty of room for anybody to disagree with me. There's plenty of room for people to doubt what I might have to say. But I'm pretty confident that we're going to cover it today in a way that's going to objectively look at the possibilities that are available to us. So what I hope will be the outcome of this webinar today is the perception by everyone that's here of how they can win in the new economic environment. Now, you're going to have some questions, I'm sure, maybe even some arguments to put forth. So type your questions, comments, arguments, whatever they are, in the question box on the right side panel. I'll get to as many as I can in the question and answer period. Raise your hand if you actually want to talk and have the opportunity to dig down a little deeper into the thoughts. And any unanswered questions, please just send me an email and I'll do my best to answer them. All right, so just follow along with me. If the Trump administration, with its team of what I believe to be very capable appointees, successfully mitigates most of the potential downsides associated with its policies, the resulting environment could offer significant opportunities for various businesses. And here are the probable opportunities that you'll see out there across various sectors. Now, I carefully worded this, that's why I read it. And I don't want to put this out as an absolute. There's a lot of contingencies in here, like if his team successfully mitigates most of the potential downsides. Every policy you come up with has downsides. And good government would anticipate those downsides and mitigate them. So we're assuming that this new administration is going to be smart enough to do that. They've got a lot of very bright people, very bright economically, very bright in business, fully capable of anticipating those downsides and mitigating them. So that's why I wanted to start out with this introduction. All right, I want to first look at the general opportunities for business. And there is going to be an increase in domestic investment. There has to be. It's all about America first. Where's the money going to go? It's going to go here. And so business aligned with America First policies such as domestic manufacturing, agriculture, and infrastructure development are likely to see increased government support and incentives. Tax breaks and subsidies for companies bringing jobs back to the U.S. could encourage reinvestment and expansion. So basically, this is what this is saying to me here is anything to do right now with manufacturing, agriculture, infrastructure development are going to be winners in the future. And so when you're putting together your target for acquisition, if it's within these areas, chances are it's going to be a benefactor of what's coming. Streamlined regulatory environment. The reduced regulatory burdens across industries may enable businesses to operate more efficiently, lowering compliance costs and fostering innovation. I personally believe that the regulatory environment is going to be phenomenally attractive to business in the future. That you're going to see government interference cut dramatically with business. And if anything, I think the tendency there is going to be to over-deregulate as opposed to under-deregulate. So a lot of the frustrations that business people have been facing for years, I think are going to get dramatically low. The time that the owner of a business has to spend worrying about compliance is going to drop dramatically, giving them more of an opportunity to spend time developing their businesses, that the drain on management and their time is going to be less. So when you're looking at buying a business, I think you have a reason to be optimistic that it'll be more profitable when you own it than when the prior owner owned it. Enhanced market access for U.S. goods. Efforts to promote U.S.-made products, both domestically and internationally, could lead to expanded market opportunities for exports. And then potential trade deals emphasizing American interests could benefit businesses in industries like energy, technology, and manufacturing. So if you have an attunement to those three areas, you are going to be coming into a period of phenomenal opportunity. Now, here's one for me: access to skilled labor through workforce development. And the key word there is through workforce development. I'm already seeing indications in the people that Trump has appointed that there's going to be an emphasis on training people and upgrading their skills for higher paying jobs. And there's going to be focused investments in vocational training and workforce development programs that could help fill skill gaps, particularly in manufacturing, technology, and healthcare. The reason that this is important to me is I like training businesses, okay? I operate one here. You're part of it. And so I see an opportunity, even for things that I have an interest in how I can work with the government to grow my business here and to grow other training businesses because of the need for training to upskill our workforce into the more sophisticated jobs of the future. Sector-specific opportunities. And this is going to be the big one: manufacturing and industrial. Manufacturing is going to come back to the US. And you're going to have the opportunity to acquire companies that have been hanging on, relatively low profits, relatively low purchase price, but it's got the core there, because you're looking for enough skilled and trained people in the company that they can bring in people and train them under themselves like apprentices. All right. So if you have a business that's got the core group there, that's expandable. That can be scaled up. If the business has lost all of its key people, then that's a problem, because now you don't have anyone there to serve as your core, as your hub. But if you are looking for the right kind of company to acquire, in the sense of it's got a complete core group, then that company can be scaled up relatively quickly for growth. Repatriation of production. Companies can capitalize on incentives to bring production back to the US, tapping into domestic supply chains and reduce dependency on imports. So if you're a buyer of a manufacturing company, you're going to want to have an eye towards what is the government doing that will help actually subsidize me, give me grants, do things for me that will help me to grow that company. So if you have an understanding of those benefits that are available, now when you're out looking to acquire your business, you're going to know that you have access to those and you can bring those into your newly acquired business to make it more profitable more quickly. Automation and advanced manufacturing, investment in robotics, AI, and Industry 4.0 technologies could boost productivity and competitiveness in global markets. So again, as you're looking for companies to acquire, you can look for companies that already have some of these embedded in them, or that can benefit dramatically when you bring those advancements into the business. Defense and aerospace. Increased defense spending offers growth opportunities for contractors and suppliers. Defense and aerospace isn't going away. And Trump's policies are going to build a strong America, defense-wise and aerospace-wise. We got a lot of catching up to do to some of the technology that's been already deployed by China and Russia. And so the subcontracting, you may not be able to buy Boeing, but you might be able to buy one of their subcontractors and benefit from all that. Energy, okay, oil and gas expansion. It's going to drill, baby, drill. Deregulation and support for fossil fuels could create opportunities for companies involved in exploration, production, and distribution. We already have one of our PIBA Gold partners who has already targeted, we're working now on this, has targeted offshore service vessels. These are the vessels that, among other industries, bring all of the stuff out to the rigs in the ocean that these oil rigs need to both drill and then collect and gather the oil after they've drilled it to the oil site. So there's a company that's going to explode in terms of its growth. Clean energy transition. While traditional energy may benefit, smart policies could also create opportunities for US-based production of renewable energy components and technologies. Now remember, all those solar panels, those windmills, all of that clean energy stuff, where has it been coming from? It's coming from China. Well, we're not going to be bringing it in for China in the future. The emphasis is going to be on, to the extent we have it here in the US, it's going to be produced domestically. So again, this is going to open up tremendous opportunities, even though the emphasis will no longer be on clean energy the way it was. It's still going to have an emphasis, and it's going to have to now get made here. Infrastructure and construction. We have so many of our PIBA Gold partners that are going after construction companies. Why? In all areas of construction, by the way. Public works projects, significant infrastructure investments could benefit construction companies, engineering firms, and suppliers of building materials. Part of America First is great infrastructure, and it's got to get rejuvenated, and new aspects of it need to get built literally from scratch. Smart infrastructure, companies developing technologies for smart cities and sustainable construction could thrive under modernized public works programs. So again, we're trying to focus your energy on where's the beef? Where is that beef going to be for the next 2 to 4 to 6 to 10 years? And this is trying to give you the flavor of that beef. Technology and innovation. Government contracts for tech development, increased defense and cybersecurity spending may provide opportunities for tech startups and established companies developing innovative solutions. Now, I know we're not in the startup business here, but what happens with a lot of these companies, we see it all the time. The startup starts up, but they don't start up with people who understand business. They start up with people who understand technology. And if I was a young guy out there in the wilderness today, and I happen to have an affinity for technology, I wouldn't be looking to start a company. I'd be looking at tech companies out there that are startups that are struggling because they don't understand business. They don't understand finance. They don't understand other principles that they need to understand to scale up a business for growth. And I'd be there to consolidate them and bring them under an umbrella that could help them to grow, where I provided them with all of those business elements that they didn't have themselves, but where they had those technology skills that would be the basis of a thriving company. Blockchain and fintech, okay, blockchain. I'm hearing about it all over the place. It's always been a buzzword, but it's a bigger buzzword now. And support for blockchain and cryptocurrency could lead to expanded opportunities in financial technology. Trump is a big crypto guy. He really loves crypto, and you're going to see a lot of energy being poured into crypto. So I've never bought cryptos. I've never bought a Bitcoin. I don't own any. I don't have any interest to own any. I've always looked at it as the Dutch tulip of a few hundred years ago, when the price of tulips went through the moon because everybody bought it and bought tulip bulbs on the basis of the growth that was being exhibited. until finally the last tulip bulb was bought. And after that, the whole thing crashed because once the last one was bought, there was no support for the marketplace anymore. So in any event, to each his own, not my industry, but to those who like it, there's going to be a lot of opportunity in it. Agriculture and food processing. Technological adoption and investments in precision agriculture, automation, and supply chain efficiency could enhance productivity and profitability. So there's going to be a much more profitable agricultural industry out there, which that lends itself to acquisition so that after you buy your company, you're benefiting from that technology, which makes the company worth a lot more, a lot quicker in the future than it is at the time that you're buying it. Export opportunities. Favorable trade agreements and initiatives promoting U.S. agriculture could open up new markets for small and mid-sized farms. Just look at what Trump did in his last administration. Okay, he made deals with the Chinese, which they didn't perform on, but he'll get them to perform. You'll watch the tariffs. You'll watch the level of pressure he puts on these other economies to fulfill agreements and to buy American. And he was very successful at getting other countries to buy our agricultural products. And then he subsidized the farmers with the tariffs that he put on these other countries in order to get them to leverage them into the purchases of our agricultural products. Export opportunities, favorable trade agreements. I have to say, Trump has been one of the masters of those types of agreements. So you're going to see more of them in the future, is my belief. All right, now healthcare. Domestic production of pharmaceuticals. Okay, where are they all made right now? They're made in China. I would not be happy to own businesses right now in China because the pressure is all going to be dramatically to bring them back here. So onshoring pharmaceutical manufacturing presents opportunities for biotech firms and suppliers of medical equipment. I would love to go into and buy right now medical equipment manufacturers, medical equipment distributors, whoever it is that's in the supply chain of what it takes to produce medical equipment. These are going to be huge growth areas in the US, and the government pressure is going to be there to drive these industries back into this country. Telemedicine expansion. Businesses offering remote healthcare services could grow rapidly with expanded policy support. So again, if I was interested in medical services, looking at companies out there that could use or were positioned right now to use expanding technology for telemedicine, I mean, that would be a target company for me if that was an interest that I had. Transportation and logistics, domestic shipping growth, a focus on domestic production, not may. It's going to increase the demand for logistics and transportation services. That's going to benefit trucking, rail, and warehousing businesses. So all that commercial real estate out there, folks, that has become questionably valuable because the buildings were vacant, you watch over the next year those buildings get sucked up to handle the new manufacturing processes here, the need for depots for trucking, because instead of having all of the components being trucked around and moved around in a foreign country to produce an end product, which is then sold here, now all that trucking and movement and all of those parts logistics are going to happen within the bounds of the country. So these businesses are going to grow. They're going to become more profitable. Modernized infrastructure, upgrades to transportation networks could streamline logistics and reduce costs. Because logistics is going to be so important to bringing these companies back on shore, money has to be put into the transportation networks, rail, air, road, truck, all of it. And you're going to see tremendous amounts of money being spent there, but productively spent there because it's going to be needed in order for the U.S. transportation to do its job in the new environment. So anything that supports that is going to have an upward pressure on the business. Just plain old retail and consumer goods, the Made in America branding. Taking companies that have maybe overlooked this and looking at how to remarket that same product, but that's made here, into a dynamic marketing message. You're going to see a lot of remessaging of marketing. Made in America is going to be key. You want to sell it, it better say Made in America on it, because that's the new environment. So U.S. products may experience increased consumer demand. E-commerce growth, enhanced infrastructure and logistics could support growth in online retail. Well, online retail to me has never been in jeopardy of not growing, but it's going to grow even more because of all the factors that we've just been discussing. So e-commerce businesses are for sure going to get their share of growth. Financial services. SME leading opportunities, deregulation, and incentives for small business growth could benefit community banks and alternative lending platforms. Now, you may not be able to buy Bank of America, you may not be able to buy Citigroup, but there's going to be community banks that can be bought out there. We're looking at one or two right now. There are alternative lending platforms that are out there in fairly great numbers. We list a lot of them in our research section of our website, of the Bizarre Financing website, and they're for sale, many of them. As many are available there as almost in any other industry. And financial services are going to be a growth area as well. Wealth management for investors. Economic growth and investment-friendly policies may increase demand for financial advisory services. So if that's a business that you know, you came up through the life insurance industry, you came up through the investment industry, you came up through other related industries, and that's what you know a lot about, and you want to look to grow by acquisition in those environments, good time to do it. They're going to be phenomenally successful if they're just reasonably well managed. Emerging business opportunities. Now, this is a topic that I really like because the word emerging means that they're not mature yet. They're in their growth stage anyway. And now they're just going to be put on steroids. And here I'm talking about education and workforce training. The marketplace of the future is going to require technical and technological sophistication. The workforce is going to have to be trained for that. There are jobs that are going to disappear, and there are jobs that are going to have extraordinary needs. And the people who have the jobs that are being phased out are going to have to be retrained for the jobs of the future. So companies offering skill-based training and workforce development solutions will benefit from government investments in vocational education. This is the focus of a project you've heard me relate to before, I'm sure, which is called Relight America. And it's all about creating prosperity centers where part of the function there is to retrain, to develop workforces in the jobs of the future as opposed to the jobs of the past, and to give people the opportunity to have those skill sets based on a apprenticeship type of structure where eventually they become like the journeyman and eventually they become the master, and all the way they're getting trained by the category above them, and then they're helping train the category below them. And where when they come just at the very beginning, they actually have a way where we create a way for them to earn income while they're learning. So they learn and earn. We provide their transportation to make sure that they can get there from wherever in the local area they are. So we remove all the barriers to getting trained. We provide training where you both receive and as you learn, you give back to accelerate the training process. We're really proud of that program, and it falls right into this education and workforce training. Environmental management, firms providing cost-effective environmental solutions could find opportunities under relaxed environmental regulations, but aimed at sustainable growth. What I believe is going to happen to the way humans react to these changes is if you love the environment and you really want to protect the environment, and government emphasis is coming off of that in favor of expansion and growth. Well, to me, there's a whole marketplace out there that is going to worry about that. They're going to be concerned about that and looking at private enterprises that can create solutions that can be sold to that vast portion of the public, that this is a big value system of theirs. To me, is a great growth opportunity because it means the government isn't going to do it. And if you're wise and smart in the private sector, you'll figure out a way to relieve the pain of the environmentally conscious who are concerned that if the government isn't doing it, they'll buy it from you because your solution meets the challenge. So I personally would be very excited about that. Immigration and HR services. Companies specializing in workforce management, including navigating new immigration compliance rules, could experience growth. Pressures don't go away. They just move. They move away from here, but then they come up over there. The human needs don't change. The needs of people outside the country to want to come to America are not going to change. The emphasis is going to become more on legal immigration as opposed to the lack of immigration. And so to me, working in an area or buying companies or building a company in an area that specializes in helping immigrants navigate the compliance rules, since it'll be legal, but the compliance rules are still going to be there, to me, that's a growth field. All right. So I'm seeing that as a potentially great growth field. And again, if that's your interest, instead of thinking from the government's going to solve that problem, think of as a part of the private sector how you solve that problem and how you monetize it. Okay. So these are a whole new sense of opportunities for the fact that there's a huge body of people out there that are interested in the environment, interested in climate change, interested in all those things. And if the government moves out of that sector, their inclinations are not going to go away. Their want to pursue things that are going to promote that are not going to go away. The difference is going to be in who provides the solution. And so if the government doesn't provide it, then it's an opening for the private sector to provide it. Regional revitalization. Business in or serving rural post-industrial areas may benefit from targeted investments in these communities. All right, now why is that even on here? Okay, it's not a business, it's a government probably doing it. But if you're in a business that's serving a rural area or a post-industrial area, the reality is there's going to be needs for revitalization in those areas. And the way that I look at that is if the government supports it in any way, it'll be in the way that they did opportunity zones, where the government selected underprivileged areas, underserved areas, and then they created a tax incentive for people to start a business there, build a business there, conduct a certain type of business there, build employment there. And those are the kinds of benefits I see coming from the government in the future. Rather than just hand out grants and hand out money, they'll create tax incentives for the private sector to just do it. And so you want to maintain an awareness of what are those opportunity zone equivalents, because they'll be there, because that's the way Trump does stuff. He doesn't do it by paying for it. He does it by creating an incentive for other people to pay for it. Strategic considerations for business. Adaptability to new trade policies. There are going to be changes. There's going to be a whole new regimen with how this company trades with other countries. So you want to pay attention to that. And you should assess your exposure to tariffs and explore opportunities to localize supply chains or development alternatives. If you see big tariffs going up on a certain kind of product, then you can have a great deal of comfort that that product is now going to be incentivized to be produced and consumed in the United States from a domestic producer. So when you buy a company, remember this important fact, when you buy a company, the biggest factor in pricing a business is its past earnings. And you're going to buy it at some multiple of that past earnings. And yes, future possibilities does enter into it, but it's way smaller than the reality that the business only made X in the past. And the facts that it can make 10X in the future might be exciting and make other people want to buy in that area, but they're going to price it and they're going to only be able to finance it based on a multiple of the EBITDA, the earnings before interest, taxes, depreciation, and amortization. They're only going to be able to buy it as a multiple of what it did in the past. And a business can only be financed by that. No lender is going to say, yeah, I'll loan you 10 times what it's worth because it's going to be worth that. No lender will do that. So in order to finance a business, it has to be bought at a low level of EBITDA based on what its past earnings were, which you as the entrepreneur can leverage the ability to buy that business into a much higher value for you as these futures materialize. Investment in technology. Businesses leveraging advancements in automation, AI, and green technologies are likely to gain a competitive edge. Green technology is not going away, folks. It's going to be there. The demand is still going to be there, but now it's going to be up to the private sector to be creative in solutions on how they fill it. And for those who can be creative, huge wins ahead for them. So if I were looking to buy companies in these areas today, I'd be looking for companies that had some degree of struggle to them because the people who were running them didn't understand business, or somebody who was running a company was technologically astute but frustrated by all the things they have to do to run the business. And I can come in and be their partner and take that off their shoulders and let them focus on their genius, which is the technology. And both of us can make a whole lot more money doing that than if that technology person is wasting all their time trying to do all those aspects of business that they're not skilled at, don't understand, impatient with. It's just an opportunity out there. Focus on domestic markets, shifting focus to domestic demand and aligning with government priorities can create long-term growth opportunities. That doesn't need a lot of explanation. It basically just says what it is. Collaboration with public initiatives, public-private partnerships is what they were called in the past. But partnering with government-led programs in infrastructure, education, and technology can secure funding and market access. Again, this speaks well of a construction business, where you can do work for a community, work for the federal government, work for all of these companies or all these government entities that have projects where they have to rely on the private sector to actually perform the project. They can provide funding, they can provide direction, governments can do all that, but they can't build anything. That has to be done through a private enterprise. And buying private enterprises that have those opportunities can be a really worthwhile acquisition. All right, so what you have here is with effective policies and mitigation of challenges, businesses across industries can capitalize on these opportunities to grow, innovate, and thrive in a reshaped economic landscape. So hopefully this has made some sense to you. And if you have any thoughts or comments or questions, I would welcome the opportunity to take those. So, do you have any questions? I see a hand up. Demon, I'm opening up your microphone, so from
Okay,
getting
can you
started.
hear me?
I can. How are you?
Yes. How you doing, sir? It's always a pleasure talking with you, and again, I appreciate you doing these.
Well,
Um,
I appreciate you asking questions.
so listen, there's been a lot of talk back and forth about tariffs and how tariffs can basically um, impact the people who put them on. And so I just want to know, what are some of your concerns or maybe comments about that? Because I've been hearing that tariffs at times can be good, but it just seems that this consensus on everything is that tariffs are going to be bad, that Trump is going to impose. So
It depends.
how do you
Yeah,
okay, go ahead, I'm listening.
yeah, no, good. It depends how he would impose them. And I have a lot more confidence in Trump's ability to know what's good about tariffs and what's not. If you just impose general tariffs across the board on products, then what happens is, first of all, the country on which you impose them is tempted to put tariffs on your products. And so that can end up in a tariff war. And in fact, nobody benefits from that. The other aspect that can potentially be negative with tariffs is that if you impose a tariff on a certain product, the party that pays it is really the importer. So when the importer of that product pays the tariff, then they're inclined to want to pass it along to the consumer, which would help to create inflation. But that's not typically what happens. Look at all the tariffs that Trump imposed on the Chinese, on everybody. The other country ate the tariff. What I mean by ate the tariff is they knew that when it came into this country, there was going to be a 10% charge, a tariff. So they reduced their prices by enough so that when the distributor or the importer was having to pay the tariff, the price to the importer was still the same. And then when they sold it, there was no reason for them to increase the price because their cost was the same. Because after the tariff was imposed on the lower price now put on it by the exporting company that brought it here, then the impact on the price was not that much. And if you're China and you're affecting a certain marketplace and you're selling at this low price in order to, or a low price in order to bring your product into the marketplace here, and a tariff is put on you, you have two choices. You can let it increase the price, which will annihilate the demand, okay, or you can eat the tariff on your end and let it be passed through so that when the tariff is put on it here, the price is effectively the same as it was before. In 92% of the times that the tariff was raised, that was the outcome. So when you're
Hmm.
selective about where you put the tariffs, it generally does not hurt. I mean, that's why you had, with all his tariffs, you didn't have inflation under Trump because he didn't just blanket tariffs on general products. He was very specific about it. He used it specifically as leverage. And where he applied the tariff, he knew that the exporting country was going to have to eat that tariff amount on their own side. Now, the reason that they can do that is China's labor market is a fraction of what it is in the United States. So they can undersell the United States and still make extraordinary margins in China. But if they put a tariff on it and they have to eat it in order not to suffer a loss in demand, then they still have the room to do that over there. It does negatively affect them. It takes less. They're going to have less money in their treasury over there, less money in the hands of their workers over there when they're tariffed. Okay, but they can't let that tariff go through unchallenged, meaning without them subsidizing the tariff from their end. Or what'll happen is the demand just drops. It goes to nothing. So they
Hmm.
can't do it. So, in the hands of a skilled person, a tariff is a dynamic weapon for leveraging other countries into either what you want them to do or into stopping unfair trade practices. It's going to be very viable for one or both of those.
Okay, and I appreciate that. Let me ask you one more last question.
Sure.
Um, how, in your experience, is inflation beneficial to a person who's doing a acquisition? I'm just saying is that just say if inflation I'm just being a devil's advocate here, goes up, just say at a certain level, how can we as business buyers use inflation as an asset to the business acquisition process? Is that even possible? I know you got a lot of experience. You've seen many different business cycles throughout your tenure, for as doing what you've been doing. So, I mean, how does that play a role, or how can we leverage or maximize in that type of environment?
Okay, here's where inflation actually has its advantages for an acquirer of a business. Okay, there are two things, first of all, though, that go together. Okay, high inflation and high money cost. Okay, so
Okay.
you can't separate them. The two of them are inextricably connected. All right, they're connected. So as inflation goes up, so does the cost of money. However, there are certain money costs that don't go up that much. Okay, and let me give you an example of what they are. If I borrow from a bank, I'm going to be penalized by inflation. Okay, if I borrow from an asset-based lender, I'm going to be penalized by inflation, higher interest costs. Where the higher interest costs don't really happen is in the seller financing. And as financing gets restricted by inflation because it's harder to borrow money, seller financing becomes a bigger piece of the acquisition price. So in a low inflation market where money is abundant and not very expensive, sometimes the sellers will end up not financing any portion of it, or maybe 10% of the purchase price. But when money is really constricted and really expensive, and they can't sell their business without a lot of seller financing, they'll take sometimes 50, 60% seller financing, maybe sometimes even more, depending on how hard it is to sell their business. And in a non inflationary world, those interests on those notes to the seller are usually around 4 or 5%. In the inflation environment, they're 5 or 6 or 7%. So they're not much different. All right.
Okay.
Okay. So now you're going to be paying that loan off over 5 to 7 years. All right. Well, over 5 to 7 years, if the inflation rate is, and I'm going to go high, 10% per year, then the money you're paying with in the fourth and fifth year is a fraction of the value of what you got when you used that seller financing to buy that business. So you're letting inflation pay off a lot of the value of your business because it's going to be easier for you to make that money 7 years out from now than it is to make that amount of money today, because your pricing will be different. Your margins may be the same, but if your prices are higher and your margins are the same, then you're making a whole lot more money that you can use to pay
Right.
off money down the road much easier than you can pay it off today. I mean, everybody understands in business the nature of inflation, but your question was, how is it an advantage to you? It's an advantage to you because what you want to do is find the lowest cost financing you can, push as much of it as you can out to as many years as you can, and let the value of the inflation pay. Now, I even structure my loans with two types of lenders. One is a mezzanine lender, because they're very flexible on what they'll do with you with payments.
Right.
Okay, and then the seller. So instead of having a note with the seller, where, for example, I amortize a note over 7 years, I'll amortize it over 10 or 15 years with a balloon payment in 7. So what that does is it keeps my payments in these early years really low, and that as inflation is reducing the value of the dollars I'm paying with, I pay them with a balloon payment in the end, but I pay them with a low amortization schedule in the meantime. All right. Or
Right.
or I structure the note so it even has more flexible payments than that. The first year I pay them as if it were amortized on a 15-year basis. And that's my payment for that year. Then on my second year, I pay that as if it were amortized on a 12-year basis. And then on the next one, I pay it as if it were amortized on a 10-year basis. So now I've got really low payments the first year, a little bit bigger the second year, a little bit bigger the third year. And then I'm doing that until the end, where I've now ratcheted it up, but I'm still making these payments that aren't as much as they normally would have been in an amortization, with a big balloon payment at the end. So I'm figuring out creative ways to keep my upfront payments as low as possible
Possible,
and build
right?
them into the later years when inflated dollars make it easy for me to pay it off.
So just really hearing from you, and I think when I say this, you're going to probably say yes, but you feel like during the next 4 to 6, maybe 10 years, you feel like the private sector is going to probably be the savior to America. You think that a lot of things are going to resonate in the private sector. You feel like the private sector is going to play a pivotal like point in the
Yeah,
regrowth of America, and you
y-
feel like that's going to be where the gold is going to be in
yeah,
the
yeah,
private sector.
yeah, that's what I do. And I'm not going to say that the public sector isn't going to want to get things done, but they're going to do it by creating incentives for the private sector to do it. So there's going to be protection through tariffs. Okay, they're going to protect the domestic growth. They're going to do things like create a tax deduction or a tax incentive for doing certain things in certain industries or doing certain things that improve the labor force. But in other words, the government isn't going to do it. And Trump's MO in the past has been trying to figure out how he creates a win for somebody in the private sector to do it so that the government doesn't have to put its hand its, its hand in its pocket to take out money from future taxes, interestingly enough, to do it. If I create the right incentives for the private sector and I relieve them of the burdens of regulatory compliance and I take away all of their barriers that are self-imposed by our government for growth, those businesses should and have, under Trump in the past, grown fast enough that it more than pays for the reduction in the taxes. All right, example, he reduced the tax rate, right? Big tax
Right.
reduction, okay? The government revenue went up. Why did it go up? Because the businesses became more prosperous because they didn't have the tax burden. They were able to take the money and invest it back into growth, back into the things that helped them grow. And their costs of doing business came down so that they were making more profit. And from the more profit, paid the lower tax rate, creating more money for the government. I mean, that's the kind of thinking you need running the government. And we have it for the next 4 years.
Okay. Well, it's going to be definitely an interesting thing to see. Of course, you got both sides, left and right, and hopefully somewhere that we can meet in the middle, and find that sweet spot. But again, I know you're about business and the private sector and us being able to get into that, and of course leverage ourselves into that machine, and then be able to build. It's like a Lego set, right, or a puzzle. Just be able to add other pieces of that to make a bigger piece, or make something a little bit more substantial. So I
Yeah.
appreciate everything you do, and again, I'm glad that you take out the time to do these things. I really, really do.
All right. Well, thank you, Devon. I really appreciate your good words. Let me call on Darrell here. Darrell, are you with us?
How are you?
Well, fantastic. Thank you. How are you?
I'm well. I am well. I two things. One, I wanted to, if you could perhaps restate your for finance, helping with financing programs and acquisition programs, and you mentioned your staff members' contact information. If you could restate that for me, that would be great. And then also, when you mentioned mezzanine debt, is that something you go deeper into in the uh,
I do.
program?
Yeah, I do.
Oh,
Yeah.
and then that's more favorable. And then obviously it looks like it'll be more favorable with inflation. That's a great question the previous caller
Yeah.
asked, because now it also means that if with inflation, more revenue, more enterprise value in the future, it should equate to that. Not in all cases, of course, but is that what you see happening or
Yeah.
forecast happening? That more? Okay.
Yeah, I do. Let me give you the name of of the fellow who's in our on our team at the National Diversified, who really has his hands on all of our programs and can be really helpful to you. His name, first of all, is
Daniel.
Daniel Udezi, Udezi, Udezi. And his email is very simple. It's Daniel@nationaldiversified.com. And feel free to just email him and ask him any questions that you want. Tell him, what programs you might be interested in. But just for a quick rundown, Essentials is our basic program. It's designed to help people understand leverage buyout and give them an opportunity to see that these are things that they can do, and give them examples and tremendous background in the webinars that we have for them to do that, get more information. And then we have Pro, which is our advanced program, and everything we do is there. And the number of hours of training are way more, the depth to which we go in it way more, the resources that are available through it way more, so that almost anything you would need in the way of assistance is there through that. And then the other thing that we have is we have PIBA Gold, which is a done-for-you program where there's a commitment fee, and it's substantial because we want to know people are really committed. But where we do everything for you, and the company's bought, we're your 30% partner, you're the 70% owner, and the only really hard work you had to do was to help find the company that you want to own, because it's hard for us to know what's attractive to you. So we'll work with you to develop a criteria. How big is it going to be? What industry is it going to be in? What profits does it need to have? Where does it need to be located? All the things that, if you're going to own a company, that are going to be important to you. And then once we've identified the industry that you want and the size company, all of those factors, you can come along with us all the way. But the responsibility falls on us and our team to do it, and that includes getting the financing for it, everything, whatever it takes.
Yeah, it sounds good. I'm working on a partial acquisition where I'd have 10% of a company doing 14 million in revenue. I found about 600,000 in tax savings, and then I want to be able to leverage that into more acquisitions in that space, on supply chain, vendors, what have you, so that we can facilitate more deals in that niche. So I definitely want to talk about that. And then I have one other question. So I think your program definitely fits there. And then the other thing is, I have a hedge fund guy who has clients who are looking to get out of the stock market because they feel there's going to be a pullback and they want to get more into private debt. So I don't know if you're looking for, investment capital.
Absolutely. Absolutely. There's just never enough of that, because that's our only limiting factor on growth, is making sure we got capital to get our deals closed. Because it takes a certain amount of equity. We can leverage, 80, 90% of the money, but there's usually got to be some equity money in there. So we make it very attractive for an investor, because we're leveraging their money a lot in all the other debt that we bring into the company, so that the growth is, in terms of an ROI, is phenomenal. But so that's an area we're always interested in. And if you want somebody to talk to there, you can write this number down. His name is Todd, 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 and he heads up our finance side of the ledger. And his email is todd@nationaldiversified.com. And he's a guy that, if you have any sources of capital and you want to work out something with him, to bring those guys to us, and we're happy to pay everybody that contributes here. So
sounds like a plan. I love win-win situations.
Absolutely. They're the only kind. The only kind. All right. Well, again, Darrell, thank you, and I appreciate you raising your hand. And I love to speak to real people. I don't mind reading questions off the question box, but I really love talking to people. So thank you. All right. Well, I guess I've run out of questions, and I've also run out of time. How do you like that? There is one question I didn't answer here, though. It says, what types of farms might be ideal to purchase considering a possible tariff war? Well, the tariff war isn't going to affect negatively a farm, but it could affect it positively, as it did last time, where the agreement by the Chinese in order to limit Trump's appetite to put tariffs on their other products, agreed to make substantial purchases, which he's now going to make them do, or he's going to put more tariffs on them again. So the chances are pretty good. Any product that is shipped to China is going to benefit from what's coming. Now, I can't guarantee these things, but that's the general inclination. If you read the tea leaves, that's where the likelihood is going. So thank you, Brian. Well, listen, I want to thank everybody for your enthusiastic presence here today. I really appreciate the interactivity, and I'll look forward to seeing you all in the next one of these that we do. Again, thanks for being here. Bye.